Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to exit your highly appreciated assets tax deferred so you can create and preserve more wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. In each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deal stories, and inspiration so together we can make complex tax deferral strategies simple and passive income plans achievable. We're streaming on expertcresecrets.com, Capital Gains Tax Solutions YouTube channel, the Kingdom Luxury Realty YouTube channel, and Kingdom Luxury Realty Facebook channel. And I'm very excited about our next guest. You guys are in for a real treat. He's the founder and CEO of the WealthNet Investment Management firm. He's been doing this for since 1997, so almost 25 years, if my math is correct. Very intelligent and can deep dive into the markets, has a ton of knowledge and a ton of information. Author of his new book, The Financial Freedom Blueprint. And I'm very excited to introduce to you guys Louis Llanes. Louis, how are you, my friend? Thank you for coming on.
Hey, I'm doing well. It's good to talk to you. Ready to dive into whatever you want to talk about.
Yeah, absolutely. Absolutely. So I really want to just kind of get a little bit back up a little bit for the listeners and tell us how you got to where you are today.
Oh, wow. Okay. That's a really interesting story. So early on when I was young, when I was a kid, I was really into music, and I'm a pretty accomplished musician. I play guitar and saxophone and drums.
Wow.
So I was really into music a lot. And when it came time to leave high school and it was time to go to college, I had a scholarship to to go into music. And I decided not to do that because I thought it would be more fun to just kind of hang out with girls. So,
Nice.
typical guy. So I kind of deferred that decision. But then I had kind of a smack in the face because my mom she was very smart. She said, listen, you need to either go to college or you're going to go to the military, but you're not staying home. So that was really great because it really forced me to get into action. So my grandfather was really nice, and he let me rent a house. It was really in a bad part of town, and there was nothing in the house but this one book. And I had to figure out anything to do to kind of make ends meet. I didn't know what I was going to do. So I was working construction in the middle of summer. Actually, my girlfriend's brother had a construction company, and we worked with these really high net worth people. We laid this really elaborate marble and stuff. And I was wondering, why am I making $5 an hour? And that guy who owns this house with his beautiful wife has this multi-million-dollar house, and he's like really rich. And I'm like, what's the difference? And then I was just kind of baffled because my parents were not very financially literate. So I was lucky enough to rent this house, and I went into this house. There was this one book in this box, the only thing in the house. It was a green book, and it was titled Microeconomics. I opened up that book, and it was just like mind blowing for me because I'll never forget the graph and what it meant. It was the graph that shows how to maximize profit for a firm. And I instantly knew I needed to just go to college and study economics and finance. So that's what I did. So I had to take buses and do all sorts of things. I paid my way through college, waiting tables. And then I became a chartered financial analyst, a chartered market technician. I worked as an analyst for a hedge fund. I was senior portfolio manager for a major bank. So I went through a series of things before I started WealthNet Investments in all aspects of the investment management and financial planning world. So my journey was quite long, and a little bit indirect, but that's kind of generally how I got into the business.
Yeah, absolutely. That's awesome. So you picked up a book on microeconomics and we're blown away. And not many people can say that. Like that is an amazing thing. I mean, most people would have thrown that thing in the trash or used it as firewood, right? Like,
I'm just wired for that, unfortunately. For some, I guess, fortunately, in some ways, and it's boring to other people, but I find it fun.
Absolutely. So I want to dive into kind of your book and all that kind of stuff. But before I do, I want to step back just one more time and just ask how have you used your strengths, or what strengths do you have that have kind of led you to be successful? I believe everyone's given gifts. spiritual gifts, superpowers, whatever you want to call them. Genius zone, right? That's a new phase being thrown out right now. So
there's all sorts of words for it,
all
right?
sorts of things, right? What is one or two superpowers or gifts that you have that have let you be successful?
So I'm a member of Strategic Coach. There's Dan Sullivan's firm, and he has this concept called unique ability. So I've spent some time thinking about that question, only because it's really important when you run a business that you're in your zone of genius or your unique ability. My unique ability is in really, I know this sounds strange, but I have a way of putting the puzzle pieces together and to be able to have foresight as to where things are headed, following trends, and to communicate those trends that's happening. So that's probably my number one strength, and I've kind of always had that. I'm always thinking about how things are moving together and what that means for the future. And that no one is perfect, no one has a perfect crystal ball, but strategy and risk management is really one of my biggest strengths. So that's what I would tell you. The second strength that I have is music. I kind of have this natural, I guess, affinity to play guitar and other instruments.
Wow, that's awesome. So I'm trying to think, when you're doing this foresight, right? Like you have like this foresight. How have you integrated music into the your ability to like kind of, I don't want to say predict or
Yeah, I know it's hard to say predict, but it's a game of probabilities, right? No, you don't know for sure anything, but you can understand the likelihood of things to happen, most likely, and then you get things wrong. Anyhow, but I wanted to. I think I understand the question. So, like, how is music related to investments and economics and all of that? I would say it's a pretty simple thing. Music is a combination of notes that are like intervals. So you learn relationships in music, and I learned how to play guitar initially by ear. So I kind of figured out, oh, that's a third or that's a fourth, and I could hear what that is. And to be able to play by ear, you need to understand how relationships and intervals. And I think finance and economics is very similar. It allows you to understand intervals, and when you can see something that's not in place or something that is in place, and then you can understand the trends a little bit better. And I'm also a very visual person, so I like to use charts and graphs and technical work as well as, looking at the numbers. But looking at numbers is really important because whenever you're investing, you want to combine the narrative, whatever the story is for that investment, as long as side by side with the numbers. So it's both narrative and numbers, if that makes sense. So you've got a story, but that story must be backed up by numbers. Otherwise, usually that investment doesn't pan out, because you can have an investment that sounds great and everybody loves it, but the numbers aren't there, you will lose money. So.
Yeah. And I think the reverse is true too, right? You can have a deal that has numbers, but if you can't cast the vision and you can't paint what it's going to look like, it might not catch the eye of the people that it needs to catch in order to, help that investment go.
That's true, but I will tell you, I trust the numbers more than I trust the narrative.
Yeah.
And let me explain that a little bit, because whenever you invest, you are only going to make money if the marketplace recognizes that you're right. So you could buy something that you think invest in something that you think is a value, but if that investment is not recognized by the marketplace and supply and demand doesn't move the price higher of whatever that investment is that you haven't put your money in, you will not make money. So you have to be able to have the numbers work in your favor as well. So if I had to only trust one thing, if I was given two tools, the fundamental analysis and the numbers, I would pick the numbers.
Interesting. So if we're going to I know we said no specific stocks or whatever, so we'll go with a concept then, the meme stocks, right? Where you have like this huge Reddit community, right? Who's all throwing YOLO into AMC or GameStop or Dogecoin or, whatever it is, right? And like they're pushing for to fight back, and you have this whole like ape community developing and whatnot. Like it moved. Like there was power in that. And when they came together, like it definitely like forced, but it's come right back down. And who knows?
Absolutely. Yeah. So there's two types of numbers you can look at when it comes to like stock type investments. Really, any freely traded investment or trading vehicle, there's two types of numbers you can look at. Number one would be the fundamentals. Those are the drivers of cash flows, things that you can tangibly look at, like from a business perspective. And then you have what's called the technical indicators, and that is simply the supply and demand for the actual instrument itself, whether it be a stock or a bond or a futures contract, currency, whatever it is. So the technicals is really important to understand because it will help you navigate the gap between the fundamentals and the price. So you have this theoretical, you can calculate a theoretical value based on a bunch of assumptions, but you can get those assumptions wrong. Most models, you barely change a certain number and it's going to change the value a lot. But the technicals themselves is observable. You can look at the price, you can look at the volume, you can look at the trends. So prime example would be most recently, we had this sell-off, we had a lot of technical indicators telling us to reduce risks. And most recently, we're starting to get indicators that it's time to start getting more aggressive in the market. And most people are still getting actually concerned about the market right now still because they still see the headlines, but the actual technicals are saying, hey, they're improving. It's not saying screaming buy, but it's saying stop being so negative.
So when
you got to look at both.
When you're doing this, when you're doing a technical analysis or when you're managing a portfolio, are you, and you can only trust one, which one are you trusting? You trusting the technicals? You trusting the fundamentals?
If I could only pick one, I would pick the technicals.
Interesting.
Because the fundamentals you could be completely wrong. Let me give you an example. So back when, I don't know if you remember the MCI debacle, Enron debacle, back when all that was happening, if you looked at the fundamental data that, the 10Ks and the 10Qs, the company looks financially sound. It looks like the revenues were growing, and it was very difficult to kind of see every aspect of corruption, right? Mm-hmm. But the price action of Enron was telling you, what the heck, you need to get the heck out of this thing, right? So, if I only had to pick one, I would pick the technicals. You can derive strategies that are purely quantitative, only using price data. And there are quantitative managers that do that. Yep. I don't say that that's how you should do it, but if I could only pick one, that's what I would do.
Interesting. So the technicals are more like the actual numbers, whereas the fundamentals are more like the narrative.
Yeah, kind of. Yeah, exactly. Yeah. Well, there are numbers associated with fundamentals too, like sales, earnings, cash flow, things like that. But the technical was more about the price action and more about the supply and demand for the security itself. So whereas the fundamentals is more about like how much did they make and are they growing and things like that. But the price can move very far away from the fundamentals, as you pointed out with all of the meme stocks.
Right. Interesting. Okay. So is all this covered in your book?
Part of it is, yeah. Actually, it is. There are some models that I give you, mental models that help you deal with the different aspects of picking stocks and for managing a portfolio, like how to manage risk. Because when you're dealing with an investment, nobody knows for sure whether something is going to go up or not if you're going long. So, but you could position size. The real secret sauce in being successful in investment management is how much you put in. Having an idea about what the opportunity is and what the risk is, and basing your position size, how much you put in, based on the risk and the opportunity. And then one other factor is important. It's kind of like a three-legged stool: opportunity, risk, and diversification. So, if you have a lot of investments that are in the same business, like we got a whole bunch of, last year we got a whole bunch of energy stocks that were coming up to like, hey, we need to buy energy. And that turned out to be a really good investment. But, we weren't going to, if we took every single signal, every single stock, we would be like boat loaded up in energy. And if we were wrong, then we would have too much risk. So the real secret sauce is being on the right side of the trend and getting what's called asymmetry, which basically means the only way that you really can, what you can control is how much you lose. So, and you control that by how much money you put into it. And then when you say, hey, uncle, I'm out of this investment. So we will sell an investment, even if we like the story and everything else, if the price starts moving against us, because a lot of times what happens, you find out later there's something wrong with that investment and it was incorporated in the price, but it wasn't necessarily incorporated in the available news or the fundamental information you could get publicly. So it's really important well, based on our style, yeah, because you could drive something into the ground. If you're only going to go with fundamentals, then you want to put a smaller percentage of your capital in it, and then assume that it could go to zero. If you're just like buy and I'm never going to get out,
Yeah. Okay. So, what is the full premise of the book, and are there like break it down for me really quickly in like the blueprint for me?
Okay, we really are switching gears a little bit because the book is broken down primarily talking about 7 steps to accelerate your path to prosperity. So we talked a lot about, strategy and stocks and all that stuff, but before you even get to that point, what's really important is to do proper planning. I think you mentioned something like about planning in your intro.
Yeah.
That is like the number one thing, because getting your finances right is 80% behavior and 20% knowledge. So it's the habits that you have and how you go about your planning. So I have outlined, over the years, I've worked with people who are mom and pops all the way up to CEOs of publicly traded companies. And no matter what place you are in, it is your obligation, in my opinion, everybody's obligation, to do the very best you possibly can with whatever resources you have been endowed.
Yeah, absolutely.
Not everybody is going to be rich, but what matters is that you do the best you have with what you have available to you. So the 7 steps talk about how you do that, how you identify and prioritize your objectives, and how you take that into gathering your information and converting it into an action plan and monitoring that action plan so that you actually achieve your goals. That is actually more important than all that fun stuff that we were talking about with all the risk management and investment management.
Yeah.
But you have to have both. So one of the concepts I talk about is, and I call this, I just kind of been thinking about what I'm going to start calling it for people so it could be easy to understand. But it's basically a kind of lifetime financial security formula. It's a combination of investment management, sound investment management, combined with sound planning. You must have both in order to have good results.
Interesting.
So the book talks a lot about planning.
Okay. So in that planning, what exactly are you proposing that they're planning for? Is it a holistic wealth management approach where you're planning for, the estate, you're planning for the the life insurance, you're going to real estate, tell me about the plan itself.
So all those things can fit in it, but it's basically planning for financial independence.
Okay.
So financial freedom, that's what everybody wants. And you're really looking for a lifetime financial security. And that could be done in more than one way.
Yep.
Right. It could be done with a mix of things. But let me break something down that I think will help everybody. You hear people on the internet or on television, gurus will tell you the only way to invest is in real estate, and you can, do all these things with real estate. And then you'll hear these other guys who are, always talking about stocks or always talking about flipping houses. There's all these things where people just like, this is the way, this is the way. So I think it's actually 3 things, because I don't know if you've heard of the Talmud before. The Talmud, it's a really ancient, old kind of collaboration of a bunch of rabbis, basically, that wrote the Talmud. And one of the things that they talk about in the Talmud is that there's 3 things you should do with your money, and in this order. Number 1, you should accumulate cash for a rainy day, right? So that's number 1. Have a cash reserve. Number 2 is you should invest in business, and that could be stocks or that could be your own business. It's usually a good idea to have your own business or be involved with a business that you can buy more businesses, because businesses is what's generating the cash. And then number 3 is real estate. So real estate is really a store of value. Once you generate your cash flow, you plow that into real estate, and that can help you preserve it and also grow it. It generally will keep up with inflation. I was just looking at the numbers for the rates of return in residential real estate. It's compounded since 1951, roughly about 4%, a little over 4%. So, it's going to keep up with inflation. On average, people put in about 2% of the value of real estate in maintenance. So there's a lot of expenses involved. But if you finance those investments, and if you if you actually have rent coming from it, you can that could be a great store of value in wealth building as well. But to say one or the other, I think is really a wrong way of thinking about it. You want to have cash, you want to have business, stocks. Don't be afraid of stocks. We've made a ton of money in stocks, and some people are like, "Oh, I'm never going to invest in the stocks." And same thing with real estate. Real estate is not the panacea, but it can be very good. So right now, I think people are overly getting a little bit over exuberant on real estate and stocks. So, which is a little bit concerning.
Yeah, definitely. Well, I've been noticing that, I'll have conversations with people who are starting to kind of really jump onto this idea of like a more holistic approach to financial freedom planning. And essentially it's, in the past, we've seen a lot of people where they're like, stay in your lane. So the insurance guy wants to sell insurance. So he's like, buy insurance. We got the financial advisor who wants the AUM. So he's like, hey, like put your money here. Like we got the real estate guy who wants transactions. Like, hey, like buy real estate. So instead of like, it being an all-inclusive, like, hey, like what do you need for your, like, where do you want to be, number one? And like, what's the best way to get there? Well, it's probably like a combination of all these things, and how do they fit together?
You could get yourself in trouble being singly focused on any one of those. I was just had a conversation not too long ago with somebody who said, I've just put all my money in things like collectibles and things I can see in real estate, and he's got a big net worth, but he doesn't have liquidity.
Yeah.
So like generating income from that is really tough. And if he sells anything, there's big expenses. I mean, let's face it, with real estate, the transaction cost and friction is very large.
Yep.
Both on the way in and on the way out. So there's pluses and minuses to every investment. In real estate, you've got some tax breaks, not so much as we used to have, but you have some tax breaks, you have some leverage capabilities. There's always some good things you can do. But with stocks, you have liquidity and you can have flexibility, and you could be part of the new economy. There's a lot of benefits there. So, just don't get stuck in any single lane, and have an open mind. And, I like having all. I mean, I personally own rental, I own real estate, and then, but I also, my big lane is really the public capital markets, stocks, bonds, and understanding commodity. You can even make money in commodities. I mean, we own agricultural commodities right now, which has been skyrocketing because of the, what's going on in the Ukraine, but we started buying it last year for different reasons, right? I mean, we had no idea. Well, as soon as we had an administration change, we knew that there was a higher likelihood that maybe the Ukraine could be invaded. But the agricultural trend was already in play last year. So, and now it's just accelerating because of the supply constraints generated from the Ukraine crisis.
Okay, so where does tax planning fit in your blueprint?
It's enormous. It's absolutely enormous. The number one conversation we have had when we do our review cycle with clients has been taxes. Let's say yesterday I was on, I told you I was on like 5 calls yesterday.
Yeah.
One client lives in Seattle, has, huge capital gains in real estate properties that he owns. And there's only like a $500,000 exclusion. So there's some things that he has to do with that. But then he's also got his wife worked for a publicly traded company. I'm not going to mention the name of it, but one you would know, and had got a bunch of stock, had a bunch of capital gains generated from, when she retired. She had to take some stock right away, and others we could defer. He had some depreciated stock. I mean, thousands of % appreciation that we're trying to minimize the tax bill. But even after that, we're talking, 7-figure gains, that you're just trying to figure out how to manage that. But if I could bring it down to the normal, like 99% of us people who are not ultra rich, if you just take a look at the simple math, your after-tax rate of return will require you to need a lot more money.
Yeah. And
so you got to be able to manage taxes. That's why we're a big proponent of tax managed strategies, where we're looking at, when we buy bonds, we want to have tax-free bonds. When we look at stocks, we want to manage, do tax loss harvesting and other things to try to minimize the losses or minimize the capital gains. But it's always, the more complicated your situation, the harder it is. Sometimes you have AMT and other things that could be brought into the picture if you have highly appreciated assets.
Yeah, absolutely. So what do you think so far is the biggest frustration that you're seeing with these people with their tax issues, or who have to do a 1031, or
Oh, yeah, I had 2 1031 conversations yesterday. It's like I don't wanna be like, both of those conversations were, I don't wanna be doing this real estate stuff anymore because it's a headache for me. And one of the conversations was, I just wanna 1031 these several properties so that I can get into a more passive thing, and then, and I don't wanna have to deal with it. And then the other one was, I just wanna figure out how to get out of it over time, and the 1031ing can be more complicated. A lot of
yeah,
times people have timing problems. And savvy people don't want to go into package deals because they know the fees are higher, the rate of return and the cap rates are lower generally.
yeah,
Not always, but generally. So it's a struggle for people,
yep. No, absolutely. And I mean, that's something that I hear every day. I mean, I asked this question 90% of the interviews that I do. I mean, I could have answered it for you, because it's
You're
the
sure?
same thing over and over and over again. It's people are like, look, I want to get out of real estate. I don't know how to get out without paying this enormous 30% plus tax bill. They're going to take the depreciation that I depreciated already. They're going to recapture it. I got to find another property. It's
Yeah.
more expensive. I have 45 days to identify it. I have 180 days to marry it, and I'm selling high and I'm buying higher. And they're just like,
Yeah.
it
I
doesn't
mean,
make
that
sense right now.
recapture is brutal
It's
because that's
rough.
all at
It's
the
so
income
rough.
tax rate.
It's so rough. So that is why we use the Deferred Sales Trust, not to be confused with the
No.
Delaware Statutory Trust. And what's unique about the Deferred Sales Trust is that you can exit real estate and go into any asset you want. It's agnostic. So you can sell real estate, go into stocks and bonds. You can sell business and go into real estate, stocks, and hard money lending. You can sell Bitcoin and go into development or stocks or whatever. So it's agnostic. It's also, there's no timing restrictions. So we had a guy who had done, this is the greatest story. We call him the Monday morning quarterback. He is the greatest. Uh, this is the greatest use of the Deferred Sales Trust I've ever heard. But he had a $20 million apartment complex in Minnesota next to the Viking Stadium. He had like $3 million in tax, and he wanted to sell it in 2006. And he couldn't find an up leg for a 1031. He's like, look, I want to sell, but I don't want to 1031. I'm pretty much fully depreciated. I just want to get liquid, and I don't think the market's going to last. So he ends up doing a deferred sales trust with us, paid off all of his paid off all of his debt, put $3 million in the tax deferred, plus all of his proceeds into a DST and stocks and bonds. Super conservative, 4.5% like return on this money. Anyway, 08 comes crash. 2012, he gets a call from the bank, and they're like, hey, that property you sold back in 06? He's like, that one that 1031 buyer overpaid for it? They're like, yeah, we're foreclosing on them. We want to know if you want to buy it back. He's like, well, how much is it? And they're like, well, it's about 40% off what you sold it. He's like, yeah, give me 3 days. He partners with his trust. He turns around, he buys the property back. And on top of that, he got a brand new depreciation schedule. So totally crazy story. But the point of it is that, and a lot of people are like, oh, well, he just got really lucky. I'm like, yeah, he did. But he was positioned right, and that's that planning part that you were talking about in the beginning, right? And the relationship between how things work. And so it's being set up for success, having the ability to defer the tax, earn 4.5% on all that deferred tax, plus the proceeds, wait, get on the sidelines, get liquid. And then when the time comes, you can go back into real estate. So it's
Right.
an
If that's what you want to
amazing,
do.
amazing, amazing vehicle that we can use in order to do it. And it works for stocks, it works for businesses, it works for real estate, primary homes, it works for above and beyond the 121 exclusion. I actually use it in Newport Beach, where I do real estate, luxury real estate, and it's my main.
I love
thing.
Newport Beach. My wife
It's a
was
good
just
spot.
out in that area.
Yeah.
Yeah.
Absolutely. So if you guys want to learn more about the Deferred Sales Trust, you can go to capitalgainstaxsolutions.com. We also have a mastermind that we do every Friday at 10 a.m. Pacific and 1 p.m. Eastern time. So you guys can come and check that out. Works for crypto and all that good stuff too. So it's crazy. It's crazy. So anyways, there's my shameless plug.
It's your podcast.
Seamless, right? Not too bad. Speaking of podcasts, you have a podcast.
Yes.
Let's talk about it. The market.
Yeah, it's the Market Call Show.
What's it about?
So we just started that. I want to say I think we've probably recorded like 40 episodes, and we're like I want to say we're like episode 28 or 29, something like that.
Yep.
That's actually out now. This podcast is really about all things financial, really.
Sweet.
I try to bring on people who are interesting in a certain area, and to be relevant to two types of people. Number one would be a high income, not rich yet person. So there's a lot of people out there that are, they're trying to build their wealth. They have a good income, but they're not rich yet. And so I bring out guests that address their needs. And then also people who are executives who are nearing retirement, and they're just trying to figure out, or that point where they're going to be done. They may not retire per se, and they're trying to figure out how I'm going to kind of work out all of my financial independence. It's actually fairly complicated, for those people, for some of those people. Not everybody, but there's so many different moving parts. So we try to bring out special, guests, and then I talk about issues that real world issues of people, what's going on with them. Like if I see a trend on what people are experiencing, then I'll talk about it. Like the trend in real estate is so that I just had another one of the conversations. Real estate is coming up in virtually every conversation, and this is the third time in my career this has happened. Whenever the real estate cycle is high, then people are talking about real estate. They're either talking about it. They're either talking about it in a way that's saying, "Oh, I'm bullish on real estate and I want to buy a bunch of investment properties," and that's when the red flag goes off, and usually those people lose money. The second one is people who are wanting to just exit. And a lot of people are moving right now. Probably the biggest trend I'm seeing in real estate is I don't want to live in New Jersey anymore. I don't want to live in California anymore.
I don't want to live in California anymore.
Yeah. And California is a big one. So from what I understand, there's some tax issues in leaving now. I don't know if that's true or not.
They're trying. There's a lot of bullcrap tax issues that they're trying to put on us over here. They're trying to put a 25% flipping tax for real estate investors.
That sounds like a nice Marxist view.
Very,
very
so
Marxist. I'm sorry, I'm not trying to be political here, but it was so funny. I have this client we were talking to. He's a Democrat, hardcore Democrat. Okay.
Yeah.
He was complaining the whole time about West Coast problems. He's like, every time and this is real estate related, every time I get involved with this, there's another tax or fee or something they're trying to get me at. And I just want to be done with this over here, or I just want out,
Yeah.
But we're seeing, what's funny about that, we had a real estate investment trust that we bought that was focused entirely. Well, we still own it. It's got bought out. It's focused entirely on apartments that are along the East Coast and in Arizona and Texas. Yeah. So and part, that's where everybody's moving, right? Yep. And it, we had a very large rate of return on that very quickly because Blackstone bought it out. It's publicly traded. So you just follow the trends. It is a relatively small company. I'm not going to mention the ticker, but but the deal's already closed. But those are the kinds of things you're seeing, and people are starting to ask the questions with regard to real estate. And but it doesn't end well. I have to tell you, at least in the experience that I've had, it hasn't ended well usually for people. So unless you're already liquid or getting liquid right now.
Yeah.
So, well, it also depends on the kind of properties you have too. We are in a different kind of a cycle right now than like the 08-09 real estate cycle, which was a big decline. I mean, just as a proxy, residential real estate went down 20%, according to the Federal Reserve, and from peak to trough, and it took over 10 years for them to reach back to where they were. So then that does happen from time to time in real estate. There is no perfect asset class. Same thing with stocks. I mean, when the dot-com boom hit and it broke, and it cracked, it took 11 years for the S&P 500 to reach new highs.
Yep.
So, and our job is to make money consistently throughout all these environments, and you can't do that by just being a one-trick pony.
Yeah, absolutely. Well, I really like the more holistic approach that I'm seeing around nowadays. At least maybe I'm just like spoiled because I get to talk to just some really smart, like super
You're lucky.
successful people, on all the people that I'm interviewing and whatnot, who are on, maybe they're on cutting edge, and we're on some new frontier over here, so
For sure.
that's what you guys get when you listen to the Market Call Show podcast and Capital Gains Tax Solutions podcast. And
Yeah, we even have some interesting things. Like we had actually a client of ours who works in financing college education. So we had this big discussion on college education because people are really thinking with their children, like, what's the value of the college education? How should I finance it? Or what should I do? Pay cash? What do you do? And then we also had another one. We actually had a teacher who teaches financial literacy for high school kids. And it's so funny. In fact, I think that episode's coming out this week.
Oh, nice.
So if you have high school kids that are going to be going to school, check it out. And we talk, and it was funny on the podcast. I said every single high school student should be required to take a financial literacy class. And I'm going as a financial or as a guest speaker to talk about that. But it's funny. Then DeSantis came out, in Florida, and came out with a bill that says it's required for financial literacy. I was like, that's perfect timing for our podcast.
Yeah, absolutely. Wow, that's good that they're doing that kind of stuff, because I mean, even getting a degree. I mean, I got a degree in business. I don't remember
how much do you use.
I use more stuff that I've learned on YouTube and talking to people like you over these past 5 years than I ever used any of the stuff that I learned in college.
Yeah, the University of YouTube is amazing.
Oh, I love YouTube University, and it's free. It didn't cost $20,000 a class.
Right. Well, I've got I feel like it's like maybe not so smart sometimes, because I did the MBA, I did this finance degree, then a CFA and a CMT and all this stuff. And it's like, out of all of that, I would say, like I say, it's like 20% knowledge and 80% behavior. It's like, what do you do day by day with your money?
Right.
And that's going to determine your success. And work with people that are smart around you. Surround yourself with people that know more about things. Like, more about this real estate tax deferral. We'll have a conversation about that.
Yeah.
But don't always think you have to know everything, and don't be a one-trick pony.
Yeah, definitely. Sound advice over there from Lewis over there. So, all right, I want to make sure I'm respectful of your time and
Sure.
to get you kind of gearing up to get out of here. So, are you ready for the lightning round?
Yeah, I don't know what it is, but I'm ready.
Oh, I'm gonna throw out some doozies at you, and you gotta fire back quickly.
I'm ready.
All right, what's your favorite leadership quote?
Leadership quote?
Yeah.
Oh, Dan Sullivan. All progress starts with telling the truth.
Interesting. I like that.
Yeah, because you can't, if you don't tell the truth about where you are right now, you're never going to make progress, because you won't know what to do.
Yeah, I like that. Okay, what's your favorite book besides the one you just wrote?
Oh, no, I don't know. That's my favorite one. My favorite book, it depends on the category. It depends on the category. So a lot of people don't like George Soros. I know that. There's a lot of people just have some issues with him. But he wrote a book called The Alchemy of Finance, which is a great book. Because it talks about, we talked about the difference between price and value.
Mm-hmm.
It's a good book. But there's more I could add to that. The Intelligent Investor, Benjamin Graham.
Interesting. Okay. What are you most curious about right now?
Most curious about? I would say I am most curious right now about artificial intelligence and what that is going to mean for the workforce and politics and really the world, because it's really going to impact things.
The race to AI. We'll see. It's going to be interesting for sure.
And I'm also curious on how to integrate, because I'm big on technology. We use a lot of technology. Integrating human beings with AI. Like, what is the best way we could use that to help the most people?
Yeah. Interesting. Okay. We'll have to have another podcast about that. Dive in to more about AI and whatnot. Where can people find you?
Well, so pathtorealwealth.com is a kind of a portal, an ecosystem that has all things about me. My bio is on there. My podcast is on there, Market Call. You could also get a book on there. We will actually send out a signed copy. You can get a signed copy by going pathtorealwealth.com/shop -books. And we'll send you a signed copy of that. And I also have actually 25 paperbacks that we're going to give out for free for those who ask for it. So that we only have 25 left, actually.
Very nice.
Yeah. So you just get in contact with us there. So Path to Real Wealth will show you my firm, Wealth and Investments. It'll show you everything of that I'm involved with.
Yeah, absolutely. Okay, so guys, so go to pathtorealwealth.com. Lewis even offered to give you a free book. I totally plugged him to do that earlier, and before our conversation, I was like, "You got to give him a free book." And he was
we
like,
could do 25 because that's
25.
all we have left from the paperbacks.
So first 25 people to get there will get a free book.
Yeah, or you can get a hard copy signed by going to that link I told you about, and it's on Amazon and bookstores and all that.
Yeah, and obviously the signed one with the autograph is worth exponentially more than the free one. So
yes.
You should go buy it.
Go for that one. Yeah.
And then check out his podcast at Market Call.
MarketCallShow.com.
MarketCallShow.com. It's on the screen there for you guys to check it out. Lewis, any final thoughts?
No, not really. Other than I think that we may be surprised by what's happening in the Ukraine, and we might actually have a buying opportunity. We'll see.
Ooh, buying opportunities. So
maybe.
I like to hear that. Yeah, it's
we'll see.
It's always good to
it's on the edge.
Always good. And as always, guys, you can learn more about the Deferred Sales Trust going to capitalgainstaxsolutions.com. And there you'll be able to sign up for the mastermind, which we do every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern Time. Lewis said he was going to be on the next one, so you guys can connect with him there. And,
put me on.
And we'll go ahead and close this out for you guys. So thank you again for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to preserve and grow more wealth. Please rate, review, and subscribe. Guys, thank you so much for your time, and we will see you next time.